So I made 2.5% on this stock. So let us discuss this. I bought this stock on this day, which is 7th of August. You can see the high volume breakout there. So let us first look at why did I buy the stock? Reason number one, the moving averages. You see the 50-day moving average, which is the blue line, is above the 150-day moving average, which is the one green line, which is above the 200-day moving average, which is the red line. So the blue, green, red combination we have. That's my first criteria. My second criteria is there should be minimum 10 candles in the base. So this is point one. So I start counting from this candle 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So there are minimum 10 candles in the base. The third criteria is there should be minimum 2 corrections in the base. So if you see here, this is point one, that's point two, that's point three, that's point four. So minimum 4 points in the base, that means 2 corrections. So all the 3 criteria that I have for the base is being met here. So I decided to buy this stock. The one criteria that was not met on this trade was the distance between the latest closing price and the yellow line was more than 5%. I prefer it less than 5% for obvious reasons. But if you see here, the distance from the closing price till yellow line was more than 7%, which is not what I prefer. But still, I went ahead and bought this stock because at the time, this stock had a relative strength of almost 93. Now, what does a relative strength of 93 mean? Relative strength of 93 means that this stock has done better than more than 93% of all the stocks in the Indian stock market. If you compare the 52-week performance of this stock with all the stocks in the Indian stock market, that's what a relative strength of 93 means. Okay. So that's why I decided that, okay, let me take a risk. But since the distance is 7%, I decided, okay, instead of taking 2.5% position, I will take half of that. Okay. So I decided to buy half of the shares. And look what happened the next day. As expected, the breakout came. The breakout was 10%. So probably this stock had a upper circuit limit of 10% for that day. So that is why it closed at 10%. But anyways, I got what I expected. I wanted high volume. I wanted the price to close above the yellow line. Both of those conditions which I was expecting was met, and that is why I decided to stay in the stock. But remember, I went in with a very small position size. I am taking 2.5% position these days. Okay, that is not the position size that I take every time. These days, since everything is at all-time high and the market is turning volatile, I have reduced my position size to 2.5%. Now, in this case, I went to even half of 2.5% because I am taking unnecessary risk on this stock. Next, look what happened here. This is a high volume, weak closing candle, but there is one ray of hope here. If you look at the high of this candle, it is 132.34. If you check here, the high of this candle is 132.34. The low of this candle is 132.70, which means there is a gap. There is a rising window between these two candles. Now, what does a rising window become? A rising window becomes support. That is why I did not sell any shares on this particular day. It was a high volume week closing, which means probably the institutions are selling. However, there are two positive points here. One is the rising window, which could become support. And second is uh, the price closed above the previous day close. Although it's a red candle, you look at the closing, it is 0.81% above the previous day close. So those are the two reasons why I decided I will not sell any shares. I will hold it there. And I forgot to mention the stop loss. I kept it at 8%. So roughly from here, if you go down 8%, somewhere here, I kept a stop loss here. 8% is not the loss that I would normally book. It is only for emergency purposes. If the stock suddenly crashes, then I don't want to book more than 8% loss. So this is just for emergency purposes. But if the stock gives me signs of weakness, I would sell much before 8%. So now if you look at the high of this candle, let us draw a line there, 132.34. So if you see, let me draw a blue line, 132.34. So that's the low of the rising window. So a rising window has got an upper line and a lower line. So the lower line becomes support. So in this case, the lower line is 132.34. So that becomes my mental stop loss. Mental stop loss means now in the future, if the price closes below the blue line, I will sell all my shares. I will not wait for the price to come down and hit my red line. That was my thinking when I decided to hold the shares. Let's see what happens next. See, the price opens, see, the price gaps up here, okay, opens very strong, but closes weak. However, one positive thing here is it could not break the blue line, which means the window still held as uh, support. Okay. Another point is the stock closed higher than the previous day close. So there are two important positive signals here. One is the closing is positive. Second is the window has held as strong support. Those are the two reasons why I decided to add more shares to my portfolio. So whatever number of shares I bought here, I bought the same number of shares here because the price is not too far away from the yellow line. Okay. And I decided, yes, I will buy more shares here and I will keep the low of this candle as my mental stop loss for this position. If that low gets broken, okay, on a close, I will sell all my shares. That was my plan when I decided to go into this stock. Okay, so now I have proper 2.5% position as the stock is coming out of this base. Now look what happens the next day. Now, the next day, interestingly, the stock opens below the window but closes above the window, which is a positive point. However, if you see the volume is high, okay, and the closing is weak. So, this is a high volume, weak closing day. So, I decided, okay, what was I expecting here? I was expecting that this low, the low of this candle should not breach, which is what I got in this case. So the stock closed above the low, but the fact that the stock touched the low, okay, that was a sign of weakness for me. That stock, after testing the window, should have gone up straight from here, okay, but that is not what I see here. I see weak price action, I see high volume, I see supply here, and I see hesitation at this window. The price is not moving swiftly forward in spite of the fact that the stock has a relative strength of in the early 90s. Okay. In spite of all these positive factors, the stock is just not moving. So I decided that I will sell my shares. So I gave the stock some time. Okay. First of all, it opened below the window. That itself was negative. Second negative was there is more supply here than there is demand. Okay. So that is why I decided to sell here and book whatever profit I am getting. I have decided that I will wait for the next base to complete here. Then I will jump back into the stock again. The stock could easily go down from here, create another base, and then I will buy back the shares. But here it was getting risky because first I bought the stock when the distance between closing and the yellow line was 7%. That itself was a huge risk. Second, I'm adding more risk by buying more shares because of this support of the rising window. So if I'm adding risk, the stock should give me that confirmation of price and volume. If I'm adding risk and the stock is not showing me confirmation, I'm out. Okay. So somewhere here, somewhere in between here, I gave the stock some time, 1 or 2 hours to show its strength, but it did not show much strength in terms of price. The volume was coming, but the price action was not showing in. So I decided that I will sell all my shares here. Let me wait for another base to complete. Let me buy it properly when the distance between the closing price and the yellow line is less than 7%. When I make that proper buy, I will tend to hold on to the stock for a longer period of time. In this case, it was better to get out with a small profit rather than going for a huge loss. See, 2.5% profit is always better than 8% loss, right? The profit might look small here, but if the chart is telling me that I should not be in the stock, okay, if the chart is not giving me confirming price action, if it is continuously testing the window 2 days in a row, I mean, in a row, one day is something which I understand, but 2 days in a row, that too on a week closing high volume, that is something that I do not expect. I don't want to increase the risk in my portfolio unnecessary if the chart is not giving me the price action that I expect. So I decided to sell the stock here, and that was my reasoning. So I hope you understood why I sold this stock here. If you have any questions and comments, please let me know in the comment section. Let us discuss this position. Okay, I might get back into this stock. I might make another video depending on how the right side develops. Let us see what is happening currently. So as you can see, this is currently the market is live. It is 9:48 morning. So this is live price action. So it's probably forming another base. I will wait for 10 candles. When it completes that base, I might jump back in again, and provided it must have good relative strength. Okay. Thank you so much.